Alphabet Inc. Class A, NASDAQ, GOGL, is the new market analysis. ISIN, US 02079K3059. Alphabet, NASDAQ, GOGL's share price fell 7% during after-hours trading Tuesday, October 25, following the release of its third-quarter report. The tech giant's revenue rose 6% year-on-year to $69.1 billion, but missed analysts' estimates by $1.6 billion. Its net income fell 27% to $13.9 billion, or $1.06 per share, which also missed the consensus forecast of 19 cents. These numbers were disappointing, but does Alphabet's post-earnings retreat represent a good buying opportunity for long-term investors? Let's examine its short-term challenges to decide. Why is Alphabet's growth cooling? During the third quarter, Alphabet generated 79% of its revenue from Google's advertising business, which hosts its search ads, YouTube, and ad network. It generated 10% of its revenue from Google's non-advertising business, including Google Play, YouTube subscriptions, and its hardware devices, and another 10% from Google Cloud, the world's third-largest cloud infrastructure platform. These three core businesses have fared over the past 3 years. Google's advertising business slowed in 2020 as the pandemic reduced ad sales. It recovered quickly throughout 2021, when those headwinds faded but hit 3 significant bumps in the first 3 quarters of 2022. First, macroeconomic headwinds dampened the market's appetite for digital ads, and that slowdown was exacerbated by difficult year-on-year comparisons with its post-pandemic recovery. Second, YouTube struggled against ByteDance's TikTok and other short video challengers. These headwinds reduced YouTube's revenue by 2% year-on-year in the third quarter, representing the segment's first contraction since Alphabet began disclosing its results separately in 2019. Finally, the rising dollar, which strengthened as interest rates rose, significantly reduced Google's total advertising revenue. In constant currency, Alphabet's total revenue increased 11% year-on-year in the third quarter, but this still represented a slowdown from the 16% steady currency revenue growth in the second quarter. Google Cloud grew and expanded significantly by acquiring cybersecurity company Mandiant in September. Unfortunately, growth in the cloud segment barely offset the deceleration of Google's other divisions in the third quarter and is still not profitable. The slowdown in the development of Google's higher-margin advertising business, the continued expansion of its unprofitable cloud business, and worsening currency headwinds have reduced Alphabet's operating margins and net income this year. How long will this recession last? Alphabet provided no clear guidance for the fourth quarter or the entire year. But during the conference call, CFO Ruth Porat warned that the company would experience even greater headwinds from foreign exchange in the fourth quarter as its advertising business continues to struggle with difficult complications from its powerful revenue performance last year. CEO Sundar Pichai said the company planned for 2023 major trade-offs where needed and will focus on moderating operating cost growth. Therefore, Alphabet will likely reduce costs and discard loss-making projects until the macro situation improves. Analysts expect Alphabet's revenue to increase by 12% for the year but its earnings to decline by 9%. But next year, they expect its revenues and profits to grow 11% and 15%, respectively, as its advertising business stabilizes. We should take these estimates with a grain of salt, but Alphabet has already weathered several major economic downturns since its founding, as Google, in 1998. During the call, Pichai reminded investors that throughout Google's history, periods of focus have allowed us to emerge stronger and unleash new areas of IT innovation. Based on these expectations, Alphabet's shares trade at only 17 times forward earnings, while Amazon, NASDAQ, AMZN, and Microsoft, NASDAQ, MSFT, still trade at 50 and 24 times on earnings, respectively. That lower multiple could limit Alphabet's downside potential and attract the attention of value-oriented investors. Does Alphabet remain a good investment? Most of Alphabet's recent problems are macroeconomic, and its business should recover quickly as soon as these headwinds pass. That recovery probably won't happen for at least a few more quarters, but we believe it is still a great time to buy Alphabet as a long-term investment in the digital advertising and cloud markets. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.